Hey guys, and welcome back to Tradingfyive. This is the channel that provides you with various informative content on the stock market as well as technical analysis. And so our today's video is based on a Fibonacci trading strategy, wherein we will understand how will we use the Fibonacci trading tool, the Fibonacci retracement tool which we call, in technical analysis for trading in the market. And in this video, we will understand right from the basic, that is what is Fibonacci sequence, what is golden ratio, how to obtain the golden ratio, how to use them in the market, up till all of the advanced stuffs about Fibonacci retracement. So now you know this video is going to be a advanced level technical analysis. So make sure you're watching this video till the end. Do not skip this video. And one more thing, that is, if you are new to this channel or not yet subscribed to this channel, make sure that you do it, so that you won't miss any upcoming videos or updates on the market. So let's start with the video and let's first understand what is Fibonacci sequence. You see, Fibonacci sequence is a mathematical formula, a mathematical sequence which was discovered by an Italian mathematician named Leonardo Fibonacci. And talking about this sequence, in this mathematical Fibonacci, first you have two numbers, that is 0 and 1. And when you add these two numbers, you get another number which is 0 plus 1 equals 1. And to obtain this sequence, this is the step that we will repeat. Add the last two numbers and you get another number, that is 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 again equals 5, 5 plus 3 equals 8. You can keep on developing this sequence by adding the last previous numbers, and this sequence goes like up to infinity. So you see, this is what you call as a Fibonacci sequence. And one thing special, one thing really amazing about the Fibonacci sequence is the golden ratio that is found in this sequence. There are 4 ratios from this sequence that we used in technical analysis, and now you will understand that why they are called as the golden ratios. You see, this is a Fibonacci series from 3 to 89. And when you divide any two consecutive numbers, any two following numbers from this sequence, the answer that you get is 0.618. It is like if I divide 3 by 5, I will get the answer which is around 0.618. And this is not just with 3 or 5. You divide any number with its next one. Like you divide 5 by 8, you divide 13 by 21, you divide 55 by 89. The answer what you get is 0.618, and this is the first golden ratio which is obtained from this Fibonacci sequence. To obtain the second one, what we will do is divide the number by skipping its next one. This means that we will divide 3 by 8, 5 by 13 or 21 by 55. You will skip a number in between and divide the rest too. And if you do so, the answer you get is 0.382. And this number, this ratio is nearly constant if you divide any two numbers in such a way in the Fibonacci sequence. So first golden ratio that we got is 0.618. Second one is 0.382. And the third one is obtained when you divide a number by skipping two numbers. It goes like if you divide 3 by 13 or 8 by 34, the answer that you get is 0.23, that is 23%. All of the golden ratios happens to be in percentage in technical analysis. Like 0.618 is 61%, 0.382 is 38%, and 0.23 is 23%. And the last golden ratio is 0.5, that is 50%. And we get this golden ratio when we divide 1 by 2, which is in the first 4 terms of the Fibonacci sequence. There you will get this golden ratio. So altogether up till now we obtained 4 golden ratios. So now let us see how can we technically implement them in Fibonacci retracement tool. But before that, let us understand what does retracement mean. You see on your screen there is an uptrend in the price, and after showing some uptrend, the price comes down. The price goes against the trend in opposite of the trend. This is called as retracement in the market. And this condition can also occur in a downtrend when the price is going down and suddenly shows some bullish move. That is called as retracement. And Fibonacci retracement is a tool which is used to identify how much retracement a stock will give. This tool provides us with support and resistance based on the golden ratio. Let me just show you on the chart. As you can see on your screen, this is the daily chart of the Nifty 50 index, which is a major index in the Indian markets. And the software that I am using currently is Tradingfyive. So now let me just show you how to exactly use this tool in the market. Firstly, you see over here the market shows some bullish move, a bullish uptrend, and after that shows some retracement over here. So you see first a bullish move and then a retracement. Now we are going to use the Fibonacci retracement tool to understand how much the market will retrace. So you see over here you will find the Fibonacci retracement tool, and over here you can see there are many tools in the market. Most of these tools are only based on Fibonacci, like the Fibonacci retracement, the Fibonacci channel, the Fibonacci circles, Fibonacci resistance fan, and more like the Fibonacci arc, the Fibonacci wedges, Fibonacci time zone, etc. But the most commonly used tool in the market is the Fibonacci retracement. So first we'll select Fibonacci retracement. So in order to use this tool, what you got to do is mark the low candle and the high candle of the range wherein retracement has occurred. You see, I am marking this low candle over here, and after that I join it with the high candle. So you see, that's how a Fibonacci retracement tool usually looks like. So now what we have to do is we have to alter some of its settings. So here you will go to the settings icon, and over here you can see some of the ratios. These are all of the golden ratio in the Fib. The only ratio that we want is 50%, 23%, 3.82% and 61%. We will deselect rest of this ratio in this tool. So now let me just zoom in, and you can see over here the market is giving you support and resistance based on the Fibonacci ratios. You see over here 0.236, 0.382, 0.5. These are all the golden ratios which are acting as the retracement levels. And since we are using this tool in an uptrend, these ratios will act as support. So you can see on your screen at 0.382 level, you can see there is a candle which is quite similar to doji. And if you have watched any of my previous video, you might know that doji indicates indecision in the market. And then let's see what happens next. You see again a green candle after doji. This indicates strong bullish move in the market, and after that a good bullish rally can be seen in the market. You see first a retracement, then a support at 38% retracement level, and after that a good bullish rally. This is the power of the Fibonacci tool. You get support and resistance based on numerological ratios, but still they are quite accurate in the market. And in this condition, I will look for buying the stock when the green candle is formed over here, and I will place a stop loss just few points below the doji. You see, in this case, I am having a very minimum risk, but the profit against the risk is fabulous. Okay, so now let us understand one more example in the market. You see exactly over here, the Nifty is showing some downtrend. And after that downtrend, a small retracement, a small upside retracement is seen. So now I want to figure out how long this retracement will go. So I will use the Fibonacci tool and highlight the high point and the low point where the retracement has occurred. Now over here you can see that after a retracement, the market shows a red candle on 50% retracement level. You can see over here a red candle is shown by the market on this 50% level, and after that the downtrend is again confirmed by the market, and you can see on your screen market shows a very good downtrend rally. This is what I call the power of Fibonacci retracement tool. This is how strong the Fibonacci retracement tool is. And now in this condition, I will take the trade after confirmation of this candle, that is on the next red candle, and I will place the stop loss just few points above the red candle. Now over here you can see my risk is some 70 to 80 points. But the profit I have made against it is very huge. The risk to reward ratio for this trade is amazing, which is something 1:9, 1:10. And this is what a trader must look for in his trade. Proper tools, proper analysis, proper risk management, quality trades. These are only the formula for making huge money in the market. You don't need to follow the tapes or news in the market. What you need is a strategy, a complete proven strategy and a systematic approach, which our channel ensures you. And I have covered various strategies, setups and systems on my channel. So if you want to be a quality trader, make sure you subscribe to this channel. And lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible. I will see you in the next video.